Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the tech sector. We're going to start off with XLK as an ETF. Then we're going to look at the major players, Apple, Amazon, Microsoft, down through Netflix, Facebook, and Google. We're going to start on the weekly time frames, zoom in from there, and look at the longer term perspective. We have a lot of inside bars on the weekly time frame as we saw that weak bounce attempt on the daily chart last week, and it set a clear lower high. And the question we have heading into this current week is, can the bulls hold on to the recent low of the dump, 68.07? I do believe they will be able to. There's enough space here for the bulls to work with. It would take a very high bear volume day, Monday and Tuesday, in order to break these levels, in my opinion. It's certainly possible, but we're going to have to see the tech sector and the financial sector show significant weakness in order for the market to see that lower low. So we're going to be watching the low of 69.62. And if that level breaks, there is a lack of support. There's two levels left to be watching, and one of them is at 69.45, the next one 68.07. So overall, we did end the week with some bearish momentum. Here's the hourly chart, close to a break of a couple support levels, and you can see after this level right here of that 69.45, there is a lack of any support until 68.07. So a couple key support tests. First thing on Monday we'll be keeping an eye on, but as far as the individual names go, here's the weekly chart for Apple. It's still very healthy. We had the all-time high 2 weeks ago. This chart and the consolidation we're seeing on the weekly time frame is probably the least significant out of the tech sector. We're still holding exponential 12 period here. This is an exponential moving average I use in the cryptocurrency space, but I've been applying it to stocks more and more recently and just keeping an eye on it. And I know as long as it's above that level, it's certainly still holding strength. So it did break a support level, but lower wicks of bulls buying the dip, still holding the support. There's no red flags on the longer term at this point. The daily time frame, you would look at this and you wouldn't even say that the market had an all-out dump. It's less visible here than it is on the individual names that we're going to look at in just a second. So we have the low of the pullback at this point, and Apple came real close to breaking that level on Thursday, and we have a double top at the high of the bounce. So the key range that we're watching is 212.32 to 222.99, and right now we're close to the middle of that range. The bulls have a slight edge. They did get some nice follow through on Friday, but basically I'm just patiently waiting for this range to break. And if we're going to break bearish, then it's probably going to take XLK to lower lows with it because Apple has such huge weights in that ETF. And if we break bullish, I would not be surprised to see SPY and the markets get that little daily higher low and higher high as well. So when I'm looking for the number one stock that has the most impact in the market, generally, I like to tend to think of it as Apple because it has such a high weight in the tech sector ETFs, and the tech sector has such a high weight in the S&P 500. Amazon on the weekly chart, much more significant pullback. You can tell the market dumped when you look at Amazon. So this is the first time we've been below some of these exponential moving averages in a very long time. And just looking at this 26 period, we closed just below it this week. Look when the last time we did that was. We're looking back here in 2016. So very notable profit taking, very notable sell-off. The daily time frame, it's the same scenario where we have the low of the dump, the high of the bounce, and now we're looking to see a higher low. And the higher low will be marked by a change in the hourly trend. On the way up, we said if the hourly uptrend is lost, our daily lower high is set. We lost that hourly uptrend here at 1813.65, and now we have a downtrend of lower highs and lower lows on the hourly. If the bulls can change the hourly trend back in their favor, that gives us a daily higher low and an equilibrium range. Low of the dump, high of the bounce, higher low if that hourly trend can change, and then a tightening range probably through next week. There's enough space here that Amazon could trade within this range into 2 weeks from now. So going to be watching very close for that hourly time frame, but also not going to be rushing here because as these daily charts tighten up, if that is the way that it ends playing out in the markets and these individual sectors, and by default their individual names, then I'm going to be less aggressive as a trader until these ranges break, because when those ranges break, that's when the volatility is going to pick up. MSFT on the weekly time frame, inside bar showing the tightening range on the bounce attempt as well. So we have a much more significant bounce. You can see how much space the bulls have to work with here compared to 104.20, the low. We could still pull back another 4% and still be above that support level. So bulls holding on just fine. Same thing. If we see the hourly trend change back in favor of the bulls, we're going to be looking for that daily higher low to be set. As of right now, I'm looking at resistance, support, lower high, trying for a higher low. So again, a tightening hourly range, and how that breaks is going to give me the setup on the daily. If this tightening hourly range breaks bullish, our daily higher low is set, and the bulls are going to make their way back to test the high of the bounce. And if that hourly tightening pattern breaks bearish and we break 107.83, then we're going to look for the daily chart to continue pulling back towards the low, but still have space to work with, which is, again, unless we see very high bear volume, that's the reason I anticipate the higher low to form on this daily time frame. Netflix on the weekly chart is a really nice equilibrium to be watching. This is going to give us a good break in a month or two. We have our high, low of the pullback, lower high, higher low, and earnings gave us another lower high. Unable to break resistance by $6.80. And now we're heading back down to support. So if we see a break of 315.81, it is certainly a red flag that would have a clear weekly change with this lower high and lower low, and probably the most significant consolidation we've seen in Netflix in a very long time. So on the daily time frame, same setup with our low, high of the bounce, which is obviously much more significant. Look at how much Netflix has sold off these 3 days, and it hit over 400 in after hours in reaction to those earnings. And here we are down over 20%. Actually, I take that back. We're down about 18% from the high of the earnings reaction. So I am keeping an eye out for a dip buying opportunity on Netflix. If the market bulls are able to form these daily higher lows and see the tightening range as we anticipate, I expect Netflix to see a solid $10+ bounce once that low is found. So I am looking for Netflix bull entry this week, but I do need to see the tech sector as a whole begin to shift its hourly trend and try and form that daily higher low. So at this point, it's just been a significant drop. The 4-hour RSI, not too close to oversold, neither is the hourly, so that's going to keep me cautious because I know that if the rest of the sector shows weakness on Monday, we can absolutely see Netflix continue to drop another few percent, and that's because we are not oversold. If we turn on the extended hours, we are oversold, so that does change things a bit. So let's see if we get another leg down, any kind of weakness on Monday. I will be watching for an entry opportunity in Netflix, and I didn't even have that game plan until right now recording this video. Facebook on the weekly time frame. This could be the first monthly trend change in Facebook's history since IPO. And let's look at it. So on the monthly time frame, we can see we started weak, but then we just formed a higher low and a higher high and changed that trend, and it's been all bull since then. And now we have our low, high, and we might lose this support level. If the bulls can bounce here, we're going to be watching for a long-term head and shoulders pattern potentially playing out with our left shoulder, our head. If the market bulls hold on here and are able to see more significant bounce, we're going to look for a monthly right shoulder to form. That's a long way away. We're talking early Q1, Q2, 2019, where that would be a factor. First things first, it's can the bulls hold this support of 149.02, which is a double bottom at this point. It would be a great neckline for that setup if that did end up playing out. But again, that's a bit too long-term macro for me to be caring about it right now. So we're just watching the support, and it was an inside bar on the weekly as well. So the daily time frame, high of the bounce was just a lower high on the daily. We were unable to break this resistance level, and now we're heading back down towards the low. So Facebook has been in a downtrend for a while, and there was that double top essentially, and now the support is 149.16. Bulls have to change the hourly trend to give us a higher low, and this would be a potential, it's not an exactly good looking one, but it would be an inverse head and shoulders pattern, just where you have lower highs and lower lows turn into a higher low and then a bull break of that double top neckline. So that's a clear resistance level that if it breaks, we're going to change this daily trend. But of course, the entire sector would need to see that higher low and continuation move form over the next week or two in order for that to play out. So wrapping it up with Google, weekly is an inside bar as well. The bounce on the daily is very close to dropping to lower lows. Bulls held on Friday, but you can see on Thursday how close we got down towards that key support level. So getting these exact levels, the low is 1075.89, high of the bounce. Bulls are trying the higher low, have to change the hourly trend here and see a bull break of 120.95 to have us looking for the daily higher low to be established and head back up to the top of the bounce. So all the bulls are looking for on Monday and Tuesday, ideally Monday, is a change in the hourly trend to give us the daily higher lows and tightening ranges. If they are unable to do so, the bears keep full control. I am watching Netflix for a bullish entry, and if we get those hourly trend changes in the tech sector, I do believe Netflix will have some of the biggest returns once it does find that support. So, hope you have a good weekend. We'll see how it plays out.